So stock was down quite a bit. It feels like fear and uncertainty are pretty high. We're not sure the indexes are done going down. Maybe we continue to get a bounce this week. It feels like the worry about Trump, the worry about the economy, all the margin that built up in the system, that's going to put pressure on stocks for a while. The margin doesn't just come off in one day.
How are you thinking about the current macro situation we're in?
So rescission it's something they could do with the budget where they can reduce how much they're spending.
Yeah, because the executive branch was not allowed to not spend the money that Congress had authorized. So even if they said like, oh, this is actually like waste, we don't need this, the rules of rescission, there was some Supreme Court ruling a while ago. I'm not an expert in this, but learned enough to get dangerous. They actually can't not spend the funds that Congress has allocated. That creates a crazy incentive to just spend as much as possible. And who knows like where that's all going. It just seems like such a boneheaded thing. Like Congress, there's no way Congress could be able to draft a massive budget and know with certainty that every single dollar of that budget is going to be spent wisely. So having some discretion to say, hey, no, we actually don't need this bit over here. As a taxpayer, that just seems like a very obvious thing that the executive branch should be able to do. Now, I guess you could argue that it might get used as a political weapon. Oh, I'm not going to support anything for Planned Parenthood or whatever things that would really cause people on the other side of the aisle to feel like they're being targeted. So I think with anything, there's a lot of things that sound good on the surface, but when you dig into the details, there might be some reasons why. But this one, on balance, it just seems very obvious that you should have some mechanism, like a release valve for some spending to say, okay, no, we're not going to spend all this money.
Yeah, that would be the wise thing. It was sounding like, okay, Doge is going to identify all this wasteful spending, but then Congress is going to spend it anyways or not reduce the deficit. So we'll see if we get actual budget cuts. That could potentially cause a recession or getting rid of all the federal workers. That could weaken the economy. I think a lot of this flip-flopping on tariffs isn't good. Businesses want some certainty. If you're part of the big three making a bunch of cars in Mexico and Canada, you can't be feeling good right now because you're faced with 25% tariffs. There's all these parts that go between the borders when they're the sub-assemblies and then they assemble the car. And the big three can't just move their production in the US in a matter of months. Like, I'm not even sure if a year is long enough.
No, I don't think it is. I mean, so this is going back in the history books a little bit, but like 13, 14 years ago, I was working as an investment banker and we were selling a tier 2 stamping supplier that made a lot of like assemblies, like for the fuel tank and some seating assemblies and stuff like that. They're just stamped metal parts. A big part of what we were pitching to potential buyers was that they were expanding operations in Mexico. I had to come up with a map and show all the different OEM investments in Mexico. And I was really surprised when I went through this exercise at like how close together the auto OEMs and then their like tier 1 and tier 2 suppliers were in Mexico. When you started tallying, like there's a $2 billion plant here, there's a $5 billion plant here, there's a $500 million supplier plant right down the road. These companies have invested tens of billions of dollars in this Mexican infrastructure. If these tariffs just come in overnight, that creates a lot of business uncertainty. If you're Mary Barra or the CEO of one of the other companies, whether you're an OEM or a supplier, how are you supposed to think about how long lasting these tariffs might be? Like maybe it pencils to invest $2 billion in a plant in Detroit or Ohio, as long as you know those tariffs are for real. But with the way that Trump negotiates, next week he might change his mind and say, we're going to completely cancel this policy. So I think the fact that there's no certainty on this makes it extremely hard to push for new capital investments on what are long-lived assets that you need like a 10-year plus horizon to justify spending this massive amount of money. He highlighted some good wins with Taiwan Semi during his State of the Union address, but I think it's going to be hard to get sustained levels of U.S. investment from companies that are currently operating overseas, unless there's a much more kind of clear picture of what the rules of the road are for the next like 10 years, not just what the policy is today.
I think Trump talking about recession or some economic weakness helped trigger the decline yesterday. The market kind of hung in there today, so we didn't see much furthering of a decline, and unless something happened at the very end.
Tesla, with its geographic diversity and local manufacturing plants worldwide, hilarious to me that it's down 15% on the day when everyone's worried about tariffs, because they're probably better poised to handle that situation than almost any other company.
So I think it's more an association with crypto and with companies that generally don't have like super solid earnings. On Friday, they had the crypto summit at the White House. And if you're hoping that the US government would be buying crypto sometime soon, you were sorely disappointed. Basically, they said, okay, we've confiscated this crypto through legal action, from criminals or whatever. We want to audit that, find out how much we have, also secure it so that it doesn't get stolen by corrupt people in the government. But they said, we're not spending taxpayer dollars on crypto, at least for now.
Yeah, they did make that very clear that this can't add to the deficit.
Mm-hmm. So there was a big crypto sell off. MSTR was down huge for whatever reason. Tesla is somewhat trading with Bitcoin, with crypto, like it all kind of trades together. So you had this big down move. It was kind of shocking to see the magnitude of it yesterday. And there wasn't really new bad news about Tesla otherwise. I guess there were the terror attacks on Tesla showrooms, but those are isolated incidents. There's 7 million Teslas out there in the wild, and less than 100 have been affected by these incidents. The superchargers, I think there's over 60,000, if not 70,000 worldwide, and you had like 12 of them burned down. I don't think there was new bad news about Tesla. Do you, Matt?
No, it doesn't seem like it. This is just one of the things we really try to do is get a gauge on sentiment. Sentiment seems extremely low right now, which can be a pretty good bottom signal. We're not calling the bottom today or tomorrow or this week or anything like that. My sense is, given the magnitude of that crazy drawdown from all-time highs that we had, that is an absolute cliff if you look at the stock chart. So there's all sorts of institutional selling, I think retail panic. You highlighted before how much margin was kind of in the system. A lot of investors who maybe got like a little over enthusiastic when we were making all-time highs. I saw some posts at the time, but we saw people adding to their exposure near the top and maybe adding margin. That can be really painful to see. But when you're a forced seller, when the margin loan comes due, that just creates pressure no matter what the price is doing, and that can create a pretty crazy spiral.
Yeah.
So
early
it
in the
doesn't
year,
seem to be fundamentals.
Earlier in the year, there were people adding leaps. There were also people racing to do their Roth conversion first thing in January. If you're going to be using margin, using leaps, or doing Roth conversions, you want to try and pick a bottom in the stock. Picking a moment in time when Tesla stock's doing really well probably isn't going to be the best going forward.
Yeah, the problem is in those moments, so many people feel like, right, like everyone finally sees Tesla like I do, and so it's gonna be $1,000 soon. You definitely get that kind of FOMO energy building up when you've got a couple weeks where it's up 15%, 20%, 15%. You're feeling really confident. Like, of course, it's not going to go back down to the 200s.
Yeah,
but I think you get that false sense of security. We're actually advising like the opposite. You want to be reducing margin when everyone's feeling euphoric, making a trim, and then adding to exposure when panic is high. It feels really uncomfortable to do that.
Yeah. So stock was down quite a bit. It feels like fear and uncertainty are pretty high. We're not sure the indexes are done going down. Maybe we continue to get a bounce this week. It feels like the worry about Trump, the worry about the economy, all the margin that built up in the system. The last time margin peaked was in November 2021, which is a month that'll live in infamy for many Tesla bulls, because that's when it hit $400 the last time. So if you have margin coming down, that's going to put pressure on stocks for a while. The margin doesn't just come off in one day. We'll post the new margin stats when they come out, but it takes time. It doesn't just come off in one day. We did look at short selling to see if there was a noticeable uptick in short selling yesterday. We used folks called S3 Partners. They have a product called Short Sight. And what we found out from that is there wasn't new short selling yesterday.
Well, a lot of Tesla investors might remember Ehor. He used to be great at posting Tesla short interest back when it was over 30% in the day. So he's still out there doing great work, but I think he just doesn't post as often. So we've got access to that information and have found it pretty helpful in kind of assessing, short level on a more frequent interval than you can see through the 15-day reporting cycles with a lag like NASDAQ and NYSE. We've got obvious over leverage built up in the system. Bit of concern brewing around GDP growth. What concerns you, or how concerned are you with what's going on right now in the broader economy? I mean, with federal employees potentially being laid off and reduced spending, are you worried that there could be a serious recession that would impact people's day-to-day lives, or would it maybe be a technical recession where you're getting some of this fluff out of the system that wasn't really economically useful, and so people's day-to-day lives might not be impacted too much?
Well, egg prices are starting to come down. Everyone was posting that on X. A bunch of chickens were culled late last year due to fears around avian flu. That caused the price of eggs to shoot up. That's starting to come down. It's lower than when Trump took office. I don't feel there's anything majorly wrong with the economy. Maybe some of the uncertainty will cause people to rein in their spending, take a pause on renovations or vacations. There might be some households that do that. But I think in general, most people are just doing what they've always done.
So I tend to agree with that. I don't think there certainly will be pockets of pain, but I agree. It doesn't seem like there's anything structurally wrong. That said, like putting my investor hat back on, looking at the multiples of the Mag 7 relative to the rest of the broader market, and just kind of concerns in general that this market sell-off might not be done. How do you think about that risk? It's so hard to call a bottom. I mean, we've had an amazing ride up for the last 15 years, basically, a little bit longer than that. After the Great Recession, a few bits of volatility along the way. But if you look at the 15-year, 20-year chart, it's like the Great Recession was a bit of a dip, or a blip, I should say. So when you're thinking about this current moment, it seems like you sense it'll be something potentially similar, where we might have a bit of a dip, probably not as severe as that Great Recession, but you'd be wanting to be investing again on the back end of it. So how are you thinking about the short-term risk with the longer-term goal that you have as an investor?
I think a further downturn is just an opportunity for us. Matt and I have been working hard on finding some other companies. For people who are all-in Tesla investors, there might just be like a couple other companies we own for them, but we do have 80% of our clientele who are diversified, so they're not all in Tesla. We're looking for other companies that we think are going to benefit from like fully embracing AI, but automation in their business and really pushing on that to reduce costs in their business, bring more value to their customers, even delight their customers maybe.
Using a little lemonade lingo.
Yeah. So we're using this time, we're not just like staring at the big red arrows down. We're using it to find new opportunities.